BigBear AI is currently trading at $4.19 during this Monday morning pre-market session, showing a slight uptick of 0.49% as of 5:07 a.m. While the broader market often views this company as a speculative satellite orbiting the larger celestial bodies of the tech world, the reality inside their balance sheet is shifting in a way that most retail investors are completely overlooking. Most people look at the 1% revenue dip in the first quarter of 2026 and see a company struggling to find its footing. But if you look closer, the gross margin has absolutely exploded from 21.3% to 34% in just 1 year. That is a massive leap in efficiency that tells a story of a business moving away from low-margin consulting work and toward high-value, scalable software. When you spend time looking at the expectation versus the reality of BigBear AI, you notice a distinct gap in the narrative. The expectation is that this is just another small-cap firm riding the coattails of a hype cycle. The reality is that they just secured over $75 million in wins this past quarter alone, specifically in national security and trade. They are cementing themselves into the infrastructure of global security, a sector where contracts are sticky and budgets are often insulated from the typical cycles that hit consumer tech. For those using a Fidelity trading platform or the Robinhood app, it is easy to get distracted by the daily price swings of Nvidia stock or Apple stock, but BigBear AI is operating in a niche of decision intelligence that is becoming a necessity for the U.S. Army and the Department of Defense. The common ground here is that everyone knows AI is the future, but the contrarian take is that the winners won't just be the ones building the biggest models, but the ones who can actually deploy them in dirty environments, places where data is messy, incomplete, and high stakes. BigBear AI is proving they can do exactly that. Their recent acquisition of Ask Sage is already bearing fruit, contributing to that margin expansion we discussed. This isn't just about investment help or finding investing sites that point to the same 5 tickers. It's about understanding how a company with a $281.9 million backlog is positioning itself for a massive revenue realization phase. If you are managing your own individual brokerage account or using SoFi Active Investing, you have to look at the institutional activity here. We are seeing a significant cleanup of the balance sheet. They settled nearly $125 million of convertible notes in January. For a company of this size, removing that kind of debt overhang is like taking a weighted vest off a sprinter. It changes the entire valuation conversation. While most people are busy checking their Robinhood stock trading notifications for the next meme move, BigBear AI has quietly built a cash position of over $431 million. That is a fortress of a balance sheet for a specialized defense player. Comment below how many shares of BigBear AI you currently hold in your portfolio. I want to see if the community is actually following these smaller defense tech plays or if everyone is just stuck on the mega caps. When we talk about the day-to-day motion of the stock, we have to address the volatility. This isn't a set-it-and-forget-it index fund like some Fidelity ETFs or Fidelity mutual funds. This is a high beta play that responds aggressively to government contract news. The recent 14% increase in their backlog was driven by a $53 million sole source prime classified award. That classified label is key. It means they are working on projects that are so integral to national security that the details can't even be public. For an investor, that creates a level of stability and moat that is hard to find in the commercial sector. Now, let's look at what BigBear AI actually does at its core, away from the ticker symbols and price targets. Founded originally in 1988 and evolving through a series of strategic mergers, they specialize in decision intelligence. Think of it as a layer of software that sits on top of massive disparate datasets and helps leaders make sense of them. Whether it's supply chain logistics, cybersecurity, or digital identity, they provide the brains for complex operations. Their Virtual Anticipation Network, or VANE, is a great example of this. It allows users to run simulations of different scenarios before they happen, giving a predictive edge that is invaluable in military and manufacturing settings. For those of you who handle your own self-investing through Interactive Brokers or Schwab Intelligent Portfolios, you know that the business model is what ultimately drives the stock. BigBear AI is moving toward a recurring revenue model. They are integrating generative AI into their Ask Sage platform, which is designed for secure AI deployment. This is a huge selling point for government agencies that want the power of LLMs but cannot risk data leaks. This isn't just online investing fluff. This is a tangible product solving a high security problem. The macro environment is also playing a role. With global tensions rising, defense spending is not something that is going to be cut anytime soon. This provides a tailwind for BBAI that many other software companies simply don't have. While a recession might cause a pullback in consumer spending, affecting something like Apple stock, it rarely results in a sudden cancellation of a 5-year Army contract for production services. This is why many people looking for investment opportunities are starting to pivot toward these specialized defense tech firms. If you're using the Fidelity mobile app or SoFi Invest to track your progress, you'll see that the future outlook for BigBear AI hinges on their ability to execute on this $281.9 million backlog. The management has affirmed their revenue guidance for 2026, which shows a level of confidence that the market hasn't fully priced in yet.
The expectation is that they will continue to burn cash, but the reality is that their net loss is narrowing significantly due to lower interest expenses and higher interest income from their cash reserves. The risks are still there, of course. Government contracts can be lumpy and delays in funding can lead to quarterly misses, but the structural changes the company has made, bringing in Kevin McCallahan as CEO and realigning their sales and technology teams, suggests they are preparing for a much larger scale of operation. This is no longer a small SPAC startup, it is a matured organization with a clear focus on national security and trade. Looking ahead, the primary catalyst will be the conversion of that massive backlog into recognized revenue. As these contracts move from the signed phase to the billing phase, we should see the top-line numbers start to reflect the growth that the backlog is currently hiding. For investors who are used to the steady growth of a Fidelity brokerage account or the simplicity of Robinhood fractional shares, BigBear AI offers a different kind of opportunity, one based on deep tech integration into the most critical sectors of the economy. In summary, BigBear AI is a case study in why you cannot just trade based on headlines. The expectation is a struggling small-cap AI firm. The reality is a disciplined defense contractor with an expanding margin and a massive cash pile. They are clearing their debt, focusing their product line on high-margin generative AI, and securing classified contracts that provide a long-term runway. Whether you are using Interactive Brokers for professional-grade tools or just starting out with SoFi Trading Platform, keep an eye on how this company manages its transition into a profitable, scalable software leader. The tension between what the market thinks it knows and what the balance sheet actually shows is where the real opportunity lies. We've seen the expectations fall short in the past, but the current reality is starting to exceed them in ways that could redefine the company's position in the tech ecosystem. Keep your focus on the backlog and the margin expansion, as those will be the true indicators of where this stock goes in the second half of 2026.